Hello, traders. I hope you're enjoying your weekend or you are about to start your weekend. This is the weekend wrap. We're going to go through the majors, look at the price action for the week. We had the major highlights of the week is the chaos that is emerging in emerging markets with the reduction of the Fed stimulus program and just basically the slow taper of 10 billion, the actual initial decision on Wednesday to continue with the 10 billion reduction had a very limited muted reaction, but in emerging markets we saw more of that, why more central banks are raising interest rates to try to encourage investments in their currencies. And what we see here right now is that many of the markets a few of the pairs have broken significant support levels, or many are resting right on them. So let's just go through and first start off with the everybody's darling, it seems like, is the Euro USD. The Euro USD has been a slow trader, and I want to tell everybody all the charts that we look at on this during this are available on the blog, so you can take a look. What I normally do is try to stack into positions on trends, basically on a daily part in the majors, at least in the Euro, the Great Britain, and Swiss. And that's been very difficult at best this month because we have had no trend. We have just basically moved sideways in this pair. You can see that on the first day of trading, we moved down towards, we broke below this range. Broke below this 137.40. It looked like, oh, we were going to get a quick move lower, and now we are at 135. So it could have been, 200 pip move if you had held it all month, but that's not I don't trade a monthly chart. So what we can do is we can see here is that we've just basically had a lot of consolidation between 137.40 and 135. It will be interesting to see the daily close. We get a break of this daily close at break of this 135 level on the daily, and I don't mean just closing at 134.80 or 134.90. I mean a 50-60 pip break. Then we're cooking with something, and we could see a new trend emerge into the new month. But we have to keep in mind that on Thursday we have the ECB, and there has been rumblings that we haven't had much inflation, almost flirting with deflation still, even with the new measures that the ECB has invoked. So we could see further announcements on Thursday that could spark a bit of volatility and maybe push us below this 135 level if we don't get it going into the before so. Or we could definitely bounce here and go right back to the top of the range. So we'll have to keep a look. If we get a break of this 134 level, first target would be basically this 133 level, and then the 131 followed by the 130. And if we look here on a larger level, this is an ascending triangle line that goes all the way down to 2008. It's been tested a few times, and that it rests right around 139. So that would cap any price action to the top side in the short term, or I guess in the long term, or could, I can't say will, definitively. So let's take a look at the Great Britain USD. The Great Britain USD, same thing. Not many stacker setups for me in this pair. It's been relatively dull. Actually, I can say I didn't enter a single stacker trade in this pair last month, and there wasn't anything. And this is very similar. You can see this is the first day of trading right here at 164.40. It closed at, and hey, it's right where we are right now. So we've pushed up maybe 100 or so pips to the top, 100 or so pips to the bottom, but we really haven't had any clear direction at the moment. So what do we have here? The pair has pushed lower. We broke the short-term support level here at 164.75. Let's say 164.50. Then I would bet that we're probably going to close right around that level. So we're not going to have anything really solid to work with. You can watch a 4-hour maybe for a bounce. What I would be looking for right now, right here, is there's nothing I want to look and do. What I'm going to look, see if we get a push down to this trend line, then we could play a bounce, or more, or the better trade would be this 166.50, 60 level. If it gets another chest of that, and just put your stops above this daily, then we could see another push down to the bottom from there, and that's what I would be looking for if I had to play that pair right now. Let's look at the Aussie, because this has been an interesting cross. The Aussie, it looked like was off to the races. Broke the 88.20 level. That, if we get on a daily here, that was a key level. The pair had been sitting above that for quite some time. You can see we tested it once, twice, three, four, boom, break it, and I thought we were going to have a big move down lower. And everybody that's been following me knows that I thought if we got, we had to push down lower, nice test of the 50 fib, I mean almost perfection, and then we had to push back down lower, and we broke the support at that zone, which was basically at around the 88.20. We're not getting anything, and we've been sitting there 1, 2, 3, 4, 5, 6, 7 days. So the longer we sit down there without any traction, now I know some people will say, well, that's a flag and people should be buying into it. I actually see it the other way. That means that people aren't comfortable shorting more at this position. I guess we'll have to see what happens there, but as long as the pair stays below this 88.20, it does favor a continued push lower, and my target would be this 83.80 level, basically the 84 level, which is the 0.272 extension. And then beyond that would be the 80 level, and I only say that because there has been rumbling from the Australian government that is where they'd like to see the pair trade. And we'll see if they can make that happen. The New Zealand USD, this pair has broken lower at the key range of 81. There was a wedge that the pair was in, and boom, it broke lower. A daily close below that would be key. If we look, though, the pair has definitely been trending lower. I mean, since it took the push up to 84. But there's a range here, and this is a clear-cut range. And I mean, this range goes all the way back until the beginning of November. Basically, just trading between 84 and 80. And so this is what I'm going to be interested in. This could be a good chance on Monday to jump in here and maybe get a pushback to the top. It is the beginning of the month, so trends do have a tendency to establish themselves in the first few days of the month. But trends haven't really been happening so far this year, so we'll have to see. And we do have all the data, of course, the ECB BOE and non-farm payroll on Friday, ECB in the Bank of England on Thursday. So we're going to watch a hold of this level here at the 81. What happens if we break it? It's been in this range for so long. I haven't put too much thought into it. We can see we have an ascending trend line here. Let's see if we have any fib levels. It might already be playing the fib levels, it looks like. Yeah, 50 fib. If we break this level, I mean, the next major level of support is down at 77.50, which is only 250 pips away. But if we break it, I guess initially you would probably look for an extension of that fib level, which at the 0.68, where would that get us? The 0.68 fib would get us at, let's put the 3.8 and the 6.8, get us down to 80.40, which isn't that much further down from where we currently are. So we'll just have to watch the price action here. Basically, if we get a nice break below this, the new resistance level would be with the 81, and we would look for a continued push lower, such as we have in the Aussie with the resistance level being the 88.20 level. Let's take a look at the yen. The yen pair have been pretty exciting. We've had lots of moves. They're moving lockstep with the stock market and the treasury yields, more specifically in the USD or in the United States. And we've had a little bit of rumbling. You see this that we've had to push lower. Pair appears to be in a wedge, but this is all I need to watch in this pair. We can look at all these other things, but the one I'm looking for is a push down to that 106, 101 level. The 101 level is basically the 50 fib of the move lower. The 101.16 level is just key support that the pair had respected on its push higher. So what we're going to see here is if the pair breaks out of this wedge to the downside, this is where we could definitely see buyers emerge for a continued push higher, test higher. Initially would be the 102.85 level, and if we break that, maybe we can go all the way back. Now, if we break below this, then we're cooking with bacon, and we could see a push back down lower towards the initial target would be about that 99 level. So we'll have to watch this. This is key. This is what you have to focus on, the 101, 101.60 level. Let's say any of the other majors. The EURJPY broke below the 50 fib of this move higher at 138.44. So we'll have to see where it closes. It's closing right around 138. Watch the price action there. It'll be interesting to see if we get a nice bounce off this level, back this above this 138.44 on Monday, then it could be a good chance to jump into this looking for a pushback higher. That's the weekend wrap. If you guys want to see the blog, any of these charts, they're on the blog. If you want to gain access to the currency watch and the keen feed, where I go through all my stacker trades, where I do a lot of daily trades, but I do a lot of scalping. My swing trades in the Great Britain odd, and always looking for breakout trades in all the pairs in European and Asian sessions. Results are on the blog. Everybody have a good one, and I'll see you Super Bowl on Sunday. Should be exciting. I don't really have a favorite at this point. I like Peyton Manning, but I guess Denver would be the team I'm rooting for, but I don't think I wouldn't be heartbroken either way. Everybody have a good one, and enjoy your weekend.